Imagine you've just set aside $1,000 and you're ready to make your very first investment. It's an exciting moment. This is your chance to put your money to work and hopefully watch it grow over time. Naturally, you want to see your investment increase in value, maybe even faster than you expected. The idea of turning that $1,000 into something much bigger is pretty appealing, right? But at the same time, you want to make a smart decision. You don't want to risk it all on a whim, and you want to be sure you're making a choice that fits your situation. That's when you start hearing about two popular options, Bitcoin and gold. On the surface, they seem worlds apart. One is a digital currency, the other a precious metal that's been valued for centuries. So which one should you choose? Is it better to go with the new and exciting world of cryptocurrency, or stick with the tried and true safety of gold? The truth is, there's no single answer that works for everyone. Each person's financial situation, goals, and risk tolerance are unique. It all comes down to what you want to achieve and how comfortable you are with taking risks. Are you aiming for long-term security, or are you willing to take a chance for potentially higher rewards? If you're drawn to the possibility of rapid growth, even if it means your investment might swing up and down a lot, Bitcoin could catch your eye. It's known for its volatility, but also for its potential to deliver big gains. On the other hand, if you value stability and want to protect your wealth over time, gold has a long history of being a safe haven. It might not make you rich overnight, but it can offer peace of mind and steady growth. Gold has been a store of value for centuries. It's tangible, meaning you can actually hold it in your hand. People have always valued gold, and that makes it a safe haven during uncertain times. When the economy is shaky, people turn to gold. Gold's price can fluctuate, but it's generally more stable than Bitcoin. It's not going to double overnight, but it's also less likely to crash. Think of gold as the tortoise in the race, slow and steady. It offers a sense of security that digital assets just can't match. Bitcoin is a digital currency. It exists only online. It's been around for a much shorter time than gold. Bitcoin can be very volatile. Its price can swing dramatically in a single day. However, this volatility also presents opportunities. Bitcoin has experienced some incredible growth in the past. It has the potential to make some people rich quickly, but it also carries the risk of significant losses. Bitcoin is like the hare in the race, fast and unpredictable. So, let's talk about weighing your options, risk versus reward. When it comes to investing, every decision you make involves a trade-off between the possibility of making money and the chance of losing it. This balance is at the heart of every investment strategy, and understanding it is crucial for making smart choices with your money. Investing in Bitcoin is, definitely riskier than investing in gold. Bitcoin's price can swing wildly in a matter of hours or days, and it's not uncommon to see double-digit percentage changes in a single week. This volatility can be exciting, but it also means you could lose a significant portion of your investment very quickly if the market turns against you. But on the flip side, it also offers the potential for higher rewards. If you catch the right wave, Bitcoin's rapid price increases can lead to impressive profits in a short period of time. Some investors have seen their money multiply several times over, especially during bull runs. However, these gains come with a lot of uncertainty and risk. Gold is generally considered a safer investment. It's been trusted for centuries as a store of value, and it tends to hold up well during times of economic uncertainty or inflation. People often turn to gold when they want to protect their wealth from market crashes or currency devaluation. It'll likely provide slower, more stable growth over time. Gold doesn't usually make headlines for huge price jumps, but it also doesn't crash dramatically. Instead, it offers a sense of security and gradual appreciation, which can be especially appealing if you're looking for peace of mind. Really, it's important to think about how much risk you're comfortable with. Ask yourself, are you okay with the possibility of losing money for the chance at bigger gains? Or do you prefer a more predictable, steady path? Your answer will help guide your investment decisions. If you're young and have time to recover from losses, you might consider putting a small portion of your money into Bitcoin. Younger investors often have a longer time horizon, which means they can afford to take more risks and ride out the ups and downs of the market. Even if things go south, there's time to recover and learn from the experience. But if you're closer to retirement or you just prefer to avoid risk, gold might be a better choice for you. At this stage, preserving your wealth becomes more important than chasing big returns. Gold's stability can help you sleep better at night, knowing your savings are less likely to be wiped out by sudden market swings. Alright, so here's the golden rule of investing. Don't put all your eggs in one basket. This classic saying is more than just a catchy phrase. It's a fundamental principle that every investor, whether you're a beginner or a seasoned pro, should live by. Imagine if you put all your money into a single investment and that one thing goes south, you could lose everything in one go. That's why spreading your investments is so important. Diversification is honestly key to a healthy investment portfolio. By putting your money into different types of assets, you're reducing the risk that comes from relying on just one investment. It's like building a safety net for your financial future. That just means spreading your money across different asset classes. These can include things like stocks, bonds, real estate, gold, and even newer options like cryptocurrencies. Each asset class reacts differently to market changes, so when one goes down, another might go up, balancing out your overall returns. Doing this helps protect you from losses. If one investment performs poorly, the others can help cushion the blow, so you're not left empty-handed. It's all about managing risk and making sure you're not overly exposed to any single investment. If you're looking for growth potential, maybe consider allocating a small percentage of your $1,000 to Bitcoin. Cryptocurrencies can be exciting and offer high returns, but they're also very volatile, so it's wise to keep your exposure limited. For stability and safety, put a portion into gold. Gold has been a trusted store of value for centuries, and it often holds steady when other markets are shaky. It's a great way to add some balance to your portfolio. And hey, you can also explore other investment options like stocks, bonds, and real estate. Each of these has its own risk and reward profile, so mixing them together can help you reach your financial goals while keeping your risk in check. Just remember, investing always involves some risk. There's no such thing as a guaranteed return, and markets can be unpredictable. That's why it's so important to stay informed and never invest money you can't afford to lose. Do your research, understand your risk tolerance, and make informed decisions. The more you learn about your options and how they fit together, the better prepared you'll be to build a strong, resilient investment portfolio that can weather any storm.